Here we go. Testing. There we go. Should be able to see that. My left screen. Okay. Cool. Alright guys, good morning. I'm not awake yet. It's very early, but anyway. I'm going to run through the markets and have a look and see if there is anything to trade. And if there's nothing, we'll end the session early. If there is something, then fine. So what are the requirements? I'll do this with open board. There we go. This is cool. So first of all, I want to make sure that my 4 hour is trending. Okay, so it's got to be trending. So I need either an uptrend or a downtrend. Ideally, we've just broken a low would be cool, because then we've got some room to move on the lower time frame. So ideally that's the case. What's also acceptable if price is coming back into an area, has started to turn. So anything like that would be great. Okay, so looking for turning points, anything like that, basically with a 4 hour has got some room to move. Hi John. Okay. Yes, the recording should be available later. 6 hours ahead of UK would be appreciated. Look, everything I'm doing here should be applicable. 6 hours ahead of the UK, so your trading day would start about, let's say, 1 to 2 a.m. UK time. There should still be moves, but yeah, it's and the stuff should apply across the board. That's a really good question to have a look at. So guys and girls, I'm looking for trends on the 4 hour, and then what I'm going to be looking for on the 15 minutes or 5 minutes is going to be bullish signals. Okay, so bullish candlesticks on off support resistance levels would be really good if I can do that, or some nice bullish candles would be good for uptrends. That's for uptrends. As my entry signals, entry above there, stop loss below there, targeting 1 to 3. I'm looking to target 1 to 3 on each of these trades. Okay, that's the plan. 1 to 3 on each of these. We'll see. I might just do 1 to 2 or 1 till 2.5 for this morning. That should kind of do it. Let's just allow. Can I relay over this? Will that work? That can be closed. Yes. This one. Here we go. Thank you. All right. So. I'm going to run through and see what looks really good here. So I'm going to go through the US indices and also create a watch list. Can I do that? Can I type, if I want to type text, can I do that? I can. Okay. Watch list. This is all good. I haven't done this before, so we'll see. Okay, so I'm looking for a watch list, and then we'll see what it is. All right, so first of all, on the to get a sense of the daily on the US indices, they're coming back into these old highs. This is a good area for this to turn around. It can come all the way back down here and test this, but that's not really, and it would be like a double bottom. So test that, and then come back and reverse that. It could do that. This is a really good area for it to turn around in. So what that means is that I would be very, very cautious of the US indices now, because they could, excuse me, I was saying, you know, there's a lot of talk. A lot of people are very bearish on the markets right now. We saw gold go down. So we had gold had a very strong kind of down day, last couple of down days. We're seeing oils fine. This, to me, guys and girls, is the clue that the markets, the markets might be okay. So let me present my case to you. Over the last 2-3 months, when we saw that the market was tanking, or let's say the last 6 months, the market was tanking, we saw a stronger dollar. And that dollar pushed euro and cable right down, as well as Aussie and Kiwi. It boosted dollar yen. Yen had its own thing going on, but it was absolutely boosted by this. And we saw gold go down, we saw commodities go down, we saw oil go down. So there was a correlation between crude oil and gold heading lower. So the common element was the dollar in that situation. So if the markets now are preparing to do another leg down, it's not crazy for us to assume we might see the same thing again, a stronger dollar. We've seen the euro go down below parity. We've seen gold go down a bit. And yet, we are seeing oil climb. So it could be a lag. Genuinely, there could be a lag, but oil is actually looking stronger now. It's come back. It's had a really good correction. You look at it from a monthly perspective. It's back in the moving averages. This is a great place for oil to turn around. So oil would then be, look at that weekly as well. That's a great bullish weekly candle there as well. So this could be a nice weekly setup for oil next week to go to the upside. So that would be bucking the trend out of everything else. Also, what Biden is trying to do, what most people don't get, is Biden is trying to rebuild the middle class. Once you understand that he's trying to rebuild the middle class, then you'll understand what like everything he's trying to do. Obviously, at the same time, he's trying to fight. Fascism is on the rise from the one party, but he's trying to rebuild the middle class. If you can rebuild the middle class, if you have a strong middle class, you have a strong economy. End of story. When you have lots of very poor people and a few billionaires, you have a real problem. You actually have an autocracy. That's basically what they go hand in hand. So if you rebuild the middle class, what happens is by taxing the upper class, you bring you calm things down. So the poverty starts getting lifted, and the billionaires the gap starts to get closed. Now, not only that, but the biggest issue right now, because it's relevant to what we're talking about today, is that if the fear, Ray Dalio, Michael Burry, they're talking about the fact that they expect a recession and a second leg down because we have because globally that governments, central banks have been printing too much money, which causes basically devaluation, and the price, and it's going to catch up. But if you tax the uber wealthy, you can use that to pay off the debts. So it is a way out, and therefore I believe that it's possible we might not have a leg down. And also, when everybody thinks it's going to happen, it doesn't happen because it doesn't work that way. So therefore, I think there's a possibility we could see the markets possibly recover. Therefore, I think the area we're in now, possibly even today, we could see it's possible. We could see a strong finish to today. We could see the markets carry on and head up. That's why I'm cautious. But the clue would be in everything. We would see a weaker dollar today probably as well. So let's have a look. So gold is looking bearish. You can hear me. The sound is good, I presume. Okay, let's have a look. So oil's looking nice and bullish. So basically, I quite like the look of that. Let's go back and let's put crude oil on the watch list. It's also, the good news with crude oil is it's already bullish for buyers. So looking for that. But it is right at this area. So the problem is at resistance. So there's that. Gold is in a downtrend. So in order for me to comfortably take a trade to the upside, I would need to see a shift in this. I really would need to see a shift in this. And I don't see that yet. We're still on a downtrend. We're producing a bearish candle right now, which means that if it closes bearishly in 17 minutes, that it could continue to the downside. So that might very well be a shorting opportunity here. So if that is going to be the case, what would I expect to see on the lower time frame? I would expect to see the 15-minute potentially starting to get ready to go down. So it would have to break that level. That's a very strong level of support. And I would say that if we break that, if we see a nice bearish candle like this, so this is trading plan, bearish candle like this that breaks through and closes below that, then I would say we have a shot at heading down. And then it would be a good trade to take. So we don't really know yet, but we would need to see a break in this area and then possibly to go short. Okay. That's what I would want to see on, that's gold. let's go to crude oils. So crude oils are looking more bullish than anything else. Look at that. Daily looks bullish. The weekly looks bullish. It has a resistance level. And this is where it gets interesting, is that if we break above the high of last week's candle, that would be a bullish move. Because remember, I'm only looking for, excuse me, I'm only looking for very small moves. I'm looking for 40, 50, 60 points or pips on my move this morning for the kind of stuff we're doing. So I just need a little bit of follow through if it's going to do that. If we go to the daily, you can see it's trying to break through this area. If we go to the 4 hour, you can see where it's trying to get through. It's this resistance band where we are. So that is what we are dealing with at the moment. So it's cool, but we'd have to go above that. If it doesn't make sense, if what I'm saying makes sense to you, great. If it doesn't make sense, please let me know. Just trying to make this stand out a bit. There should be logic behind all of this. Cool. So that is that. We'll come back to the indices in a moment. So we're bullish on oil, silver. Silver's already looks like it's setting up to continue down, so that could be the case. So let's go to 15 minutes. See, okay, this is good. So there we go. This is what I'm looking for. I'm going to be looking for a bearish setup in this area in the next 15 minutes. So another thing I could do is go to the 5 minutes. And now what I'm looking for is to see rejections occur in this area. Sorry, that's a very, very bright color. Let's bring it down. Let's go to something like this. There we go. I'm looking for a... Also, let me know if the sound is okay, because my microphone, I've put it quite far away. Let's see if I'll bring it closer. There we go. Oh, Lord. And I've got a little marker. I've just seen this now. Let me go to OBS and just fix this quickly. Where is it? Left screen. Some sort of logo that I've put in. Man, I should be working with this more often. Right monitor, left screen. What else have I done here? Give me a second. There's a logo here. Was that YouTube? It's probably YouTube. Let me just do this. I'll just go this side. Yep. Okay. Cool. There we go. Okay, good. Thanks, Adam. Cool. Cool name, by the way. Okay, so I want to go a bit darker. There we go. So there's our dark thing. I'm looking for rejection candles here. So this is a 5 minute time frame. I am looking to go short. That's the goal. And here's an example. So I'll take the live account. Create a chart quickly. This is not a hugely efficient way to do the trade, by the way. So this is a live account. So I'm going to take a, we'll go through to do, that was to do silver, which is weaker anyway. That's fine. We'll go to the 5 minutes. And this is what I'm looking for. I'm looking, technically the logic is this. This is a level of support. I'm looking for resistance to form here and to continue down. So I'm going to go to the 5 minute here, and this is the logic. I'm going to show lines. I'm not going to go instant. I just want to find my stop losses and stuff. We're going to go short. We'll go to 18.8 and stop loss will be 18. Okay, and it's a 9.5. So there we go. Okay, stop loss above the level of support here. Targeting, let's say 2.5 to 1. Well, that's actually interesting because we've got all the room to go down there if this carries on down. So let's have a look at this. Just I've got quite a few other trades open at the moment. So what's my margin available? not a lot, tiny little things. Let's have a look. Give me a second here. So the plan would be entry above the low. So let's do this. Take the stop, the entry, put it below these candles, and we're targeting a 2.5 to 1. Okay. Okay. Cool. Okay, I've got a gold trade that's just open. That's why it's taken up my free margin. Dollar yen, pound kiwi looks fine. They all look good. Okay, I just don't have a lot of margin. Sorry. Okay, so just bear with me. I'm going to do tiny token positions. So I'm doing 0.1. I'm just doing token positions because I've got 30 open trades, so that's fine. And it's a 30 to 1 account, which is good, but yeah, that's fine. So this is it. I'm looking for an entry below the low here, stop loss above the high. I'm going to quickly just place the order. Place the order. Done. So there's the order, and then we'll see. So the logic is this, and I say it's not efficient, but let me explain the logic here. Gold is also looking bearish, so let's go back to this account here. Let me show you gold. So gold on the 4 hour is in an area where in the next 10 minutes it's pulled back to the moving averages, similar to this, could produce a bearish candle. A break below that would usually imply a move, a continuation to the downside. Yeah. Are we overextended? Yeah, we could bounce up from here. We're back into these old highs. We could, which is why the trade is a little bit at risk. However, silver is weaker. Looks like we'll get triggered in on this. Silver is weaker. It's got a 4 hour bar. It's broken the low. It's produced a swing high. It's got potential room to move down to here over the next 9 minutes. We're going to get triggered in before the 4 hour bar is even closed. I went down to the 5 minutes. I'm looking for it to break these lows here. There's a level of support, which will, my stop loss is above, and then the goal is to target 3 to 1 on that. And so it's an okay trade setup. I don't know if it's perfect, but it's an okay one. So let's go see what that then looks like. Are we in the trade or not? No. Okay, so we're not in it. If we want to see the spreads, we can see the ask line as well. So now I can see you can see how it's quite wide. The spread is relatively wide, which I should have taken, which you could take into account. I can see it here as well, so it's okay. So that's it. I'm going to leave that there. If this is going to cross back over, we should be fine. If it breaks here, obviously if it breaks here, we're going to continue down. But if it breaks this, that could be okay. I'm looking for a pullback and looking for a continuation below that. So that's the first trade we'll have a look at. A target is feasible. Target, if you go to the 4 hour, the target's right here, so it's not so bad. So there is, does that trade make sense, guys? Let's go back to the markets here and let's have a look at other stuff. So let's move on to oils. We'll come back to this one, but that looks good. I like the look of it so far. UK oil looks bullish, but this area is a bit of resistance, and although it is bullish and I expect it to break through, I'm not convinced that it's going to break through in the next hour that while I'm here. Cool. And again, I'm always happy to do small amounts on a trade. What I mean by that is the maximum I personally go on a trade is 1% risk. Maximum. I regularly go in at 0.5%. Sometimes I add to my position, so I'm okay with that because it was only 0.5% risk sometimes. And I'm happy to go in at 0.1, 0.2 normally. Today I'm going in at pennies, but that's just because I want to take some trades. But never more than 1%. And the reason for that actually is interesting, is me. I have a certain temperament that if I get stressed, my trading won't go so well. So I maintain my stress. It's like it's being told that if your heart rate goes above a certain amount, you're gonna have a heart attack and die, kind of thing. It's the same with your mental stability when trading. So basically, you're just trying not to make your heart rate go up. So you do things to protect your future self. And if you think about it like that, it helps a lot, because you have to be able to, when you're losing it a bit emotionally, you have to be able to pull yourself back from that kind of cliff edge. So that you don't have to get there at all if you just start with really small trades. Most people are frustrated with not making money. So they up their risk because they're hoping that they'll finally crack the trading thing and then they'll make the money back. And so they go in aggressively. And that doesn't help. That's actually the same problem. So you basically just make yourself unstable. So the best thing to do is start with very small amounts. You will find your headspace is better, and therefore you'll tend to have better trades. And then you'll make the money. So it's counterintuitive, definitely. But anyway, so oil is looking like that. US oil is looking good here. That's the weekly. Let's look at the 4 hourly is pushing right up at these limits. The good thing about a consolidation like this is that if you break out, usually you get that's the beginning of a move. So then you've got fresh momentum, and so you could trade, but you could trade up to here if you needed to. Cool. Look at euro dollar. I think euro dollar is going to continue down for now. So is it overextended on the daily? Yes, it is. But it could, here it was overextended, had a bit of a bounce, kept going. It can keep going. We'll see. Look at the 4 hour. There's no divergence creeping in here. So there's no signs of the market slowing down. That was actually a trade setup right there. This is what I call, this is my thing. I don't have a lot of things that are my things, but this is my thing. I call this a pause and go. You get a move, and then you get a bit of 2 or 3 candles, never more than that. Like 1 to 3 candles, and then it goes again. And usually the second move is a big one. So if this is the same as this one, at least if not half that. So this would imply we're going to see euro dollar, based off what we see here, we could see euro dollar today at 9899. We could say we're at 9916 now. We could see it go further. So the problem is, can we trade out of this? So we have to go to the 15 minute. You have to, because that's not much happening. And so this is a trade. I'll take this, but this is not a great setup. It's not a great setup. Let's go back to the other account and let's have a look at euro dollar. So I'm going to add a euro dollar chart. Go through. I don't know if I want to do that. Oh, that's fine. Let's go have a look. Go to the 5 minutes. It's not a great trade setup. I wouldn't normally want to do this, but it's quite overextended because it's overextended. So what's the biggest reason to not take this trade is that it's overextended. Basically, it's very overextended. Okay, would we go live, short, stop loss here. Here's the target. Okay, so 1 minute. Let's have a look. So what we're looking for is signs of exhaustion. But yeah, this is not a great trade for the following reason. It's overextended on multiple time frames. I do think there's a strong likelihood it's going to head down. So we'll take it based off that, but I'm still not happy with that. So I'll take this one, but I do think there's risk. So let's just see how this goes. We'll enter live, so we'll just get in now. And so the reason, even better, is if it can pull back. Okay, so if it can pull back is great. And just move that up a little bit. Okay. So here's the logic behind this trade. Is 4 hour. It's not a great trade because we've got a level of support here. Level of support here. We've got lower highs getting into it. That looks okay. I've put my stop loss actually up above this level. But price could still come back up into this and continue down. Do I think it's likely to continue down? I do, but let's have a look for divergence here. So let's see what's coming in. So you go to the 15 minutes. There's divergence. So there's bullish divergence here. Signs of wicks coming in, which is signs of wicks coming in, which means it's putting on the brakes. The 4 hour looks okay. The 1 hour has no divergence, so well, a little bit here. It's not ideal. It's not shitty, but it's, excuse my language, but it's not, you know. It can continue down. We'll see. Yeah, it's not a great trade. I don't like this one. This could likely be a problem. closes in 2 minutes. I would say if that closes as a green bar, that could be an issue. So part of the reason I prefer to close when it's pulling up like this, obviously, is that if this is very cool. So if I'm already convinced that the market, there's some wicks here, which is the only idea that supports we could head lower. So the 4-hour pause and go thing is a valid idea. And I think that's a very strong possibility. That's the only thing that counts in this favor. While we overextended. So let's talk about quickly what's right with the trade, what's wrong with it quickly. There's no divergence on the daily and the 4-hourly. So the market isn't showing any signs of slowing down there. It doesn't really appear to be showing anything on the 1 hour. Let's have a look. 1 hour is showing a little bit of bullish divergence, which means it could be running out of steam. That's a possibility. But not enough yet to really change things. But when you head down to the 5 minutes, you could get a move back up here and then a continuation down. We'll see how that goes. This is a nice little series. These are things that count in its favor. We've got nice wick rejections here, which means failure, but that's not really enough. We need to see them closing down near the lows here. Then it'll break out and then it'll go. And then it'll go. So when it breaks through here, then it'll move. And so I will see, again, a candle like this or like this that will close through here, and then it's probably then going to go on and do that. So there is a risk with this trade. It has weaknesses. And there's a level of support here. So most importantly, there's a level of tested once, twice, thrice. So it looks like this. Yeah. There's a level of support. And it could be problematic. So that's why I need a breakout candle, like a momentum candle, to push through this level. So let's see. Let's go into cable. Let's go through the charts quickly. Cable's doing the same thing and carrying on. At a level of support here, but that's part of the issue. It's the same issue, but dollar. So you can tell the dollar is pushing right now. How is silver doing? Silver's going. That looks good. Silver's pushing on. We're happy with that. So there's my silver trade on its way. The silver trade makes sense. We will get a bounce here. We will get a bounce here. But once it breaks through that, we should be on our way. The euro dollar one is on its way. Okay, so that's fine. Okay, cable's going. Aussie dollar coming down to here. So here's the problem. Aussie dollar. There's a few people who've joined. Hi, Colin. Okay, good. Yeah, that's fine. Listen, with your first 100 trades, the money is not important. The process is. The technique. It's like going out there, playing with a baseball bat or throwing your first 100 balls or hitting your first 100 balls. It's not about earning your paycheck as a superstar athlete at that time. That's ridiculous. It's about getting the technique right, getting your headspace right, getting the feel of it, building up the muscle memory. That's what you do in your first 100 trades. So if you accept that, you'll be calmer and patient, and you can't force it. One of the things you cannot fast track is trading. What I mean by that is you can fast track it in certain ways, but there's a limit where nobody can fast track. You can't become a pro trader in a month, but you can become a break-even trader probably in 3 months. So if you can, and if you don't do the right things, it won't happen in 3 months. So what are the things that would do that? Because I want to keep looking for trades as well. Let's hear your comments. Yes, thank you. Internet speed can't keep up, everything blurry at work. We'll watch this later. Okay, Colin. Cheers. Thanks. Okay, so let's run through them. So my problem with taking this trade is it's coming right down to this level. It's going to hit the level again. Let's look at the 5 minutes. That's where the level is. It's over here. Not really seeing any set, and we're overextended on the 15-minute so every time price is pushed away from the moving averages, the probabilities that it's going to come back is high, and that's a real problem on the time frame you want to take the trade. It's different if on the higher time frame or the lower time frame it's potentially overextended, but if it's on the same time frame, this is the average of price. These moving averages collectively are the average of price, which means that price is ebbing and flowing away from its kind of true value. And so we really never really want to get into a trade except from the moving averages. So as close as you are to the moving averages is the best place, because that's where the market's going to move away from, where you get your money and then it's going to come back. So, and remember, as traders, guys, we are just looking for single moves. This is not investing, this is trading. Investing, you're going to buy and hold or sell and hold or whatever you're going to do. As a trader, you're looking for a single move, take your money, and you're out. And also when you adopt that philosophy, you do better. So there's a whole lot of things you have to do, have the right philosophy. You have to go, okay, make sure, you know, the market's not overextended, make sure I'm not trying to make up big losses that I had yesterday because I risked too much or I traded too much, because then you're under pressure. No trader, no matter how good they are, can trade perfectly under pressure. It eventually adds up. Yeah, okay, so let's have a look at the other stuff. Kiwi, they're all pretty much pushing down. But look at this one as well. We've had a move down, pull back, and move down and push back. So the distance between these lows usually implies the market is slowing down. Here you get a move down and a pullback, and then a move down, pullback, move, pullback. So in other words, it's starting to pull back sooner now, which means it's putting on the brakes as it hits the level. Okay, so I think what's going to be very telling today is usually when the US comes online, which is in 6 hours. You see a shift. This looks good. Dollar yen looks good, but again, we had a pullback, a move, and a bit of a pullback. This is a potential move to the upside. So we're breaking above that 4-hour bar right now. So we're breaking above it here. We've got higher lows. We've got a bit of a flat level breakout. I'm going to take the trade, but it is slightly higher risk. Again, it is slightly higher risk. So let's go through. See, now we're back up here. So there's our level of support. This is just catching up on that trade. This is trade where there's a concern. Silver, I think, is going to be okay. I think that's going to be okay. Euro, I'm not sure, if not convinced. Let's look at dollar yen. We go to a dollar yen chart. We will go to the 5 minutes. We actually want to get in as quickly as possible. Here's my template. We want to be going long. We want to be going instantly. We want to take the stop loss, move that below this bar here, and we want to target, and we'll just do pennies. Okay, so here's the logic behind this trade. I had to do that quickly, sorry. And even then, it's not a flawless, this is not a flawless setup. So we've got a 4-hour, we've got an uptrend. Prices pull back. This market reacted badly here. It's reacted badly here. So this is a level. Make no bones about it. This is a level. We've got prices pull back, nice little bullish candle, broke, the next one breaks the high. So there's always multiple things the market has to do. It has to produce, come back to the moving averages. It's leaving the moving averages. So the 4 hour is just on its way out. The train is just leaving the station, which is great. The direction is obvious. It's going up. We know there's a barrier up here because we can see, like here we had these rejections, price comes up, breaks above, closes above, but then immediately stalls, then immediately comes back. That means that this area was also an area at that time. So that area, oops, let's build it up a bit. Let's put it there. So that was a little bit of an area for these guys. We broke through, the market then stalls a bit, comes back, produces this and goes. Now, so what's actually happening now is the yen is now starting to, it's either going to have to break out of here or it's going to have to do a deeper correction. So it's going to have to do a daily retracement, which could bring it back down to these levels. Anyway, so 4 hour is just breaking through there. So we went down to the 1 hour. We're just breaking out of these. We've got a series of bullish candles. That's the logic. We go right down to the 15 minutes. We see a series of higher lows. So this is actually a breakout. What you're witnessing right now is a breakout. So we go down to the 5 minutes. And so how do you trade a breakout? The best way to trade a breakout, ideally, there's two ways. Entry above that breakout level, stop loss below here. Stop loss below the most visually obvious swing low in an uptrend. So stop loss below the most visually obvious swing low and target 3 to 1 usually. But here you can see there's a level up here. That means my take profit has to be, if I'm smart, there. Because remember, there'll be other trades. What I'm trying to do here is capture something with a high degree of certainty. This is still pushing up. Doesn't look great. More and more and more rejections. Doesn't look great. Silver. Silver, I think, is going to be okay. I think it'll be okay. Let's have a look. Dollar yen. So dollar yen, we've gone long on, and we want to make sure our target is 137.60. So what is this? 137. I'm just going to bring it under that. So 137.58. Okay. So that's the target. So what did I do here? I used the breakout candle as my entry signal, which is not ideal. And my stop loss basically below that candle. I just stuck it like it's just in here a little bit. The next, so I said to you there were two different ways of entering it. So we've had the breakout. We've already had our breakouts. We're already kind of out of here. Stop loss is below this level. It should be somewhat protected. We'll see. We're going to see if this is a failed breakout, but it should be okay. But this area could be an issue. And we've got high lows. So stop loss would normally be below here and entry as we break out. Instead, we got out just after this candle, that breakout, and the stop loss can be below this candle. So the logic is, excuse me, that the breakout candle becomes your entry. That's your thing. So this is likely coming back to test this level. We've got 38 seconds. We'll see how it does. So that's that logic. So you really want to get as close as you can, obviously, to the breakout. So we got in a little bit late, but we would only have been, I mean, the best spot we would have had would have been probably there, maybe there. So we're not that far off. We're 3 pips off our perfect entry. So, okay, cool. Let's see how this goes. That's a bit of a stall. Let's see how that goes. How's the euro trade doing? That's pushing back up. And the silver one is wobbling a bit. That's fine. We'll see how that goes. Okay, all of those, by the way, this is important. All of those right now are all pulling, the dollar could be doing the moves. So we could end up getting a weaker dollar day today. We'll see. If this comes back and stops me out, I'm satisfied with that. Because then it's come back in. It's a failed breakout. It shouldn't have been a failed breakout. It should actually be pretty happy. I'm still relatively happy with this. In fact, you could even still put your stop loss below here. So your stop loss could still be, it's not the best way to do it. I wouldn't always do that. I would prefer, as a general rule, stop loss below here. Because what can happen is, just generally, there's your general bullishness. You would generally, price should stay above that. So it could maybe come down and carry on up, but it's broken out. It should carry on. So we'll see where this is. On the 4 minutes, if this closes here, we've got a 15-minute and the 5-minute close below, but it should keep going. Let's have a look at some of the others. Dollar Swiss is looking nice and bullish. It's right at a major level. Dollar CAD is also pulling back, getting ready to keep going. So Dollar CAD appears as though that wants to keep going. Any other questions? Euro Yen looks like it wants to keep going down. So Euro Yen is looking nice and bearish. That's cool. Euro Yen is quite a nice one. Is there anything on the lower time frame? Euro Yen looks good, and it's not as subject to, look at that 5 minutes setting up a bearish candle. Okay, I'm happy with that. I have to be careful here. I'm just doing so many of these little things. So let's go here. Let's go through and have a look at Euro Yen. Okay, so that's pull back in. Let's have a look here. We've got, that's a failed breakout, guys. That's not ideal. It's not ideal. Let's see how it copes at this area where it's at. And if that's reversing and the euro dollar's reversing, no, it's okay. It's still fine. It's okay. Silver is fine. They're okay so far. They're not really moving, but they're not. Whereas this one has come right back in. Let's see how that does. Is the stop loss under the 15 minutes? Yeah, what's it like? Under the 1 hour? It should be okay. It's weird. When I look at the higher time frames, it should be okay. Let's look at Euro Yen. So Euro Yen 5 minutes is setting up a bearish continuation. So you've got a level here of resistance, support. It's very messy. Potential bearish candle. I would say there's a bit of an issue here. Okay, because of lots of wicks, guys. So you probably will get a double bottom here. Probably. I would say it's interesting because the higher time frame looks good. Higher time frame is broken through this level. That looks good. You've had a break of structure. That should be good. This should be good. Should be. All right. Should be. Stop loss above the high. So stop loss above here. You can, guys, you can put your stop loss above here. You can put your stop loss there. You can put your stop loss there. All of those, this is really important. All of those are valid. Or it's really important to understand that putting it behind a swing high and that one, all of those are valid. The trick isn't about necessarily which one is valid. They should always be valid. The trick is, what is the closest valid stop loss? And that's where experience tends to come in. So the closest valid one would be above this high. Not really protected there, but it should have some protection here. Also, I think we might as well get in live on this one and target our thing there. Let's go through. Let's do this one as well. What are you doing? Okay, so again, it would have been very nice. So let's talk about this quickly because this is important. Let's talk about this entry here. This is more advanced. This is something that only occurred to me in the last 2 or 3 years. I think this is going to be a problem. I think that'll be a bit of an issue. And I would have preferred, ideally, to get in as soon as we kind of break that low, start to look bearish or a small bearish candle, but we've got a big bearish candle. So we'll see how that goes. So we have to see how it closes, and then we have to see a follow through. And this is going to be a problem. We've got so many. We've got 1, 2, 3, 4, 5, 6. We've got a lot of support in this area. The market pushed back from it. And that is going to be an issue. Market has pulled back into this area. It's a valid area for it to go short. So my concern isn't really with this setup here. It's with this behavior over here. That is a lot of behavior. That tells you, get this, this is a 5-minute time frame. That means for 1, 2, 3, 4, 5, 6, 7, 8, 9, 45 minutes, the market couldn't break below that level. So that's interesting. So that's got a weakness. So we'll see. Let's look at dollar yen. Dollar yen is going to keep pushing up. Let's see. Looks okay. Looks alright. Should keep going. Euro is pushing down. That's good. And we've got silver is pushing down. So far, all the trades are on track. This one, over the higher time frames look really good. Let me take you through the trades. Let me take you through the higher time frames. The daily on this is a lower high, lots of rejections, breaking below the low, should be a continuation to the downside. So it should. If nothing, down to about here. That's the setup. So then we go to the 4 hour, and we're starting to move away from the moving averages. But the key thing is we've sort of broken through a bit of a level here. If we go to the 1 hour, we've got a nice downtrend in place. We've broken below that low, but it's not just how we've done it. When we break, if we break and we have a nice solid candle, that's a good thing. A break and a solid candle means like it's broken through and closed on the other side, so that's good. The current candle, which is 43 minutes to go, looking nice and bearish. It's fine. It's in play. It can change. It can change shape in. If this, it only has to move a few minutes to really change its shape. And so, like it literally in 1 minute, this thing could become a bullish candle if it had to, because it only has to move like 10, 12 pips. It's not a lot it has to do. So that's a big level that I think we might have to break through. We go down to the 15 minutes, and we've seen prices broken through a recent level here. Again, a nice solid candle. It's come back up to test it, and it wants to continue down. So we'll see. Okay, so that's the logic behind that trade. But there's that level of support is going to be a bitch. We're going to see what happens here. I'll know we're through it if we get a move, what's called a break of structure and a momentum candle. So we get a nice candle like that, breaking through it, closing. Then I'll know we're through it. Okay. Euro Swissy is looking bearish. Look at that. So right now there's a lot of weakness on the Euro pairs. I think I've got enough trades open for now. If they're going to be losses, they're going to be losses. Like, we'll have a look at them. But I think that's enough to spend some time on. I just want to see if there's anything else. It's starting to come back. Pound yen also wants to head lower, so that supports the idea of a euro yen trade south. Euro yen is heading lower. Kiwi yen looks like it wants to break through that level. Looks like it's creeping closer to it. Swissy yen is looking a little bit bearish. CAD yen, yeah. So we might see the yen pairs actually start to head lower. So what's my dollar yen trade looking like? So dollar yen was here. Dollar yen. No, it's pushing up. That's okay. That's still pushing up. That looks okay. So euro dollar is pushing lower, but yeah, it's got to close below that level. Support euro yen isn't there yet, and silver is pushing down. I think silver is going to be okay. Euro dollar I'm not convinced about. Dollar yen has that risk at the highs up here. That's definite risk. I think we're going to encounter some problems there. And euro yen has this, which is causing this. So this is a problem. That looks okay. I think that's going to keep going. I think so. If this candle finishes as a bearish candle, if that finishes as a bearish candle, might as well close the trade out. Because this happens quite a bit. You often see a move like this, it stalls, then the next candle follows through. If the next candle stalls or the next candle closes bearishly, the next candle is probably going to come back. Okay, so I'll just quickly change the look and feel here. So let's just go with lime green. Okay. Yes, I do. So, Adam, do I recommend using a demo account? But here's the thing. I don't think anyone ever really explains all the benefits you get from using, so that you know going in what you're using the demo account for. It's the same as, in a way, like with golf, you can go play a round of golf. That's true, and you'll learn when you do it, absolutely. But you could also go to the driving range and hit balls. And so when you go to the driving range and you hit balls, what are you actually doing? You're actually perfecting your technique. You know, you could go to a putting green and just practice your short game. The point is, you're improving your technique. And that's actually what you're trying to do on a demo account. You are settling on your strategy. You are settling on your strategy. Which strategy am I going to use? Because remember, you want to start with one strategy that you know, that you need to learn to master, that can make money. And so an example would be a trend-based 3-to-1 strategy that you can use in any market and any time frame. That's an example. I like that idea because trading with the trend is the safest way to trade. It's the lowest risk. It has very good rewards and more probabilities of wins. They always talk about, oh, well, you know, you can get a strategy that you have to take 20 losses before you get your win. The thing is that most people actually are only they're looking for a system they can do 3 or 4 times a day, like 2 to 5 trades a day or 2 to 5 trades per week, and basically be up 1 or 2%. If they could, and most ideally more than 50% of those trades would be winners. Most people would be comfortable with that scenario. In other words, it's very benign, it's very like vanilla, but it works. So when you pick a demo account to do this, you are choosing a strategy to master. Just choosing that. So that's the first thing, and you need to know that going in. You need to do, what you want to do is 20 or 50 or 100 trades using that strategy. So that's a beautiful milestone to work towards. If you want to do that, because over 20 trades, your brain will learn how to identify the setups. You are practicing the process of placing an order and calculating your position size. That's crucial. That has to become muscle memory. Your ability to, okay, how much risk, getting used to placing your orders and not making fat finger mistakes. So you're doing that. Excuse me. Your brain is also getting used to you taking trades where the outcome is uncertain. Because the worst thing about being a beginner trader for your first 100 trades is you have no idea when you have a losing trade if it was a bad trade or a good trade. It's only when you, like, if my euro yen trade is a losing trade, I will know why. Everything else is fine. This was a problem. At least that was one of the reasons why it's a losing trade. So you want to know that. So the demo account serves a purpose. It serves a purpose of building up your confidence, allowing you to improve your technique. Your technique is identifying a pattern, placing your entry and stop loss and take profit around the pattern, And then once you're in the trade, managing the trade, not moving your stop further out, not exiting early, allowing the probabilities to play out over 10 trades that are the same kind of setups. And then you can go, you know what, over 10 trades, I'm always going to be up. And then trusting that process. Because here's the thing. Is it possible that an experienced trader could go back to demo trading? Yeah. Let me explain why. If you're Tiger Woods and you lost your feel for golf, you kind of got to go back to the basics. You basically have to rebuild your trust and your confidence, your trust in your judgment. You've got to try to get that feeling back, get that muscle memory back. So yes, an experienced trader could have a weird losing patch and sort of lose their, see, look at this, it really doesn't want to go down. Anyway, could have, and so an experienced trader could go back to a demo account, go back to that. So when you, and it's the same in the military, you do all these drills and boot camps, and you do these like, these scenarios where you're using fake, blank ammunition, but there's noises and explosions, and they want to teach you how to focus and do what you have to do while all this stuff is going on. And then you do live training exercises, live training with live rounds. And so a real account versus a demo account, a real account is a different psychological experience. That's what it is. It's a different psychological experience. So now you're on a tightrope. You're not on a tightrope a foot above the ground. You're on a tightrope between the two buildings. And so your brain has to build up resilience and confidence in a whole other area. So what you want to do is the demo account allows you to get your technique. Okay, I know the pattern works. Okay, blah, blah, blah. And then when you go to a live account, your first few trades are going to be crap because depending on how hard you trained, your brain is going to get frazzled by the fact that it's a real account. So actually the stages would be demo account with like 10 grand or 100 grand in the balance to get used to numbers and playing your positions, finding your trade setups. Then a live account with pennies. So that in other words, you're adjusting cautiously. But yeah, that's how I would do it. It's hugely valuable. But you have to know why you're doing it. That's all. Okay, so dollar yen I'm happy with. That's going up. I'm okay with that one. Euro is going down. So I'm okay. We haven't got free and clear of this, guys. We're not free and clear of this yet. And silver is fine. Silver's fine. So that's fine. Again, every trade that I took today must be logical. Trading is logical. It is evidence-based. I wanted you to come away with that one thing, is that it is. Maybe I'll remember, if this breaks through here, then we'll be okay. But I think that's enough trades for today. Now, because I have to wrap this up in 5 minutes, does that mean that all these trades are going to go and hit their target? No, it doesn't. If they break through, they could go halfway. In other words, they could go to my 1-to-1 target and then turn around. They could. It's possible. So what I would like to, ideally how I'd like to wrap this up, boom, is to see them on their way. And we'll see how that goes. But this is battling. Look at this area. In fact, let me tell you another reason why I'm concerned. This is where the battleground was now. Now the battleground's here. So we have buyers that weren't here at this time, and they are here now. So the only way that this can become a winning trade now is if we get a breakout bar that just goes boom and just falls through that and just cuts through it. But this is now setting up as a bit of a battleground even higher up than it was. So it's communicating. The market is telling you stuff. It's going, look, we had a whole lot of 45 minutes of wicks here. We've got now 1, 2, 3, 4, almost 20 minutes of wicks in this area now. So the battleground is getting bigger. In a situation like this, you'd normally just close the trade. Dollar yen, I still think is going to be okay. Euro dollar is trying. I think it'll be okay. And silver, I still think is going to be okay. So far. Also, I wouldn't move my stop loss until I've hit my 1-to-1 target. So if you hit your entries there, and then I'm roughly up 1-to-1, approximately there, then I could then after that I could potentially move my stop loss. So again, I would still move my stop loss to behind price action as it goes. I would still rather do that. Still rather do that. Okay. Any other questions? Cool. Good. Yeah, ask any questions you have. Just Yeah, absolutely. How many trades per day or per week would be a good amount? So to give you a starting indication, not every day is a tradable day. Sometimes it's just sideways and it's terrible. It's not going anywhere and everything's right near a major level. So you get 2 periods. This is a great question. So you get 2 periods for us in the UK, all based on the hours where there's tradable moments. Probably 6 to 10 a.m. in the morning, where there's an overlap with Asian session and London session starting. And then it can go into a bit of a lull until 12 till 3 p.m. where there's an overlap with the US session. So if you don't find your trades by 9 o'clock or 9:30, then you kind of maybe want to wait until a little bit later, because sometimes the US comes online and the market, the tides, maybe the tide's coming in and then the tide changes direction. It happens often enough that I'm going to mention it, that the US markets can change the direction. A great example of that is in the morning, you're coming in, the NASDAQ or the Dow, all of the US markets are tanking. Well, that's what you think. So it's like 6 in the morning, 7, 8, 9, 10, the markets are tanking. Everyone's getting ready. They think the market, especially now, everyone's thinking there's going to be a big bear market, which is already the first alarm bell. When everybody thinks there's going to be a bear market, there's not going to be a bear market. And then everyone's shorting the market, and then it slows down about 11 o'clock, 12 o'clock, and then it starts going back up, and everyone's like, okay, it's a retracement. And then by the end of the day, it finishes up at the highs. And so that's the US coming online and just buying in the markets. And they're not tricking us. They're going, every morning they wake up, they start buying the markets. When they go to sleep, the market does a correction. When they wake up, they go, oh, okay, it's had a correction, I'm going to start buying. And so you get this. So the problem is that we're on the other side of that. We often are caught thinking the markets are going to tank, and they're not. So the US session, I'm really cautious. Almost always I trade after the US Open, because then I know which way the market's most likely to go. So that's the risk. So silver's looking bearish. I'm okay with that. Euro dollar. I need that to close down. Please don't close as a rejection. Dollar yen. Okay, that's not a good sign, guys. It's not. I'm gonna let it stop out, but that's not a good sign. So the first one was a weak breakout attempt. The second one was not just another failed breakout, but it closed as a bearish candle. I'm just going to move it a little bit below here, just a little bit further, just because, remember, I moved it closer anyway. But just because I don't want it to get stopped by spread, I want to see if that becomes a support level, but that's not a good sign. If the market was going to move, it would have moved. So it might, but it could come back down. So here's what could happen. I'm just generally going to put a line here. It could come back down to, or come back down in here and go. We'll see. In order for me to think this is going to succeed, I need this bar to close above these highs now. So now, in other words, it's closing, it's got to decide where it is. Then it'll be fine. Euro yen is pushing down. Cool. But that's a strong area. So it's a nice bar. I would have preferred to close lower. So we've got silver's trickling down. I think it'll be okay. Euro is pushing down, but it's really struggling. There's more and more buyers coming in here. So I think today, it's possible, guys. It's possible. We could see a weaker dollar over the whole day, and we could see Euro start to do a retracement to the upside. Dollar yen will come down a bit. Cable, GBP will potentially push up a bit. I'm saying I think that's a possibility. But at this time, it might only start happening later in the day. Dollar yen is looking quite bearish. So I think that's going to be a losing trade. Euro yen looks good. I'm happy with that. Euro yen looks good. We've now, especially if this one closes near the lows, we've broken through. So I think that was really good to show you that's what I would have to see to feel confidence in that trade. Dollar yen, okay, stopped out on dollar yen. That's fine. That breakout should have carried on. I think we've got some stalling here, so the market could end up going sideways. Okay, that looks nice and bullish. I'm happy with that. I'm happy with that, but we are a little bit overextended. I think you'll find this is going to carry on up anyway. I think you'll find it's going to go back up here. So we got stopped out. That's okay. I'm okay with that. So one more thing, Adam. One more thing. I'm not doing it now, but I'll do it next time. Keep a track record of the trades. So I would snapshot this when I got in and snapshot it again when it closes out, because I still think there's a high probability that this is going to finish to the upside. So the reason we want to do that as a beginner trader is because you're still trying to find out where you're right about the direction of the market, but you just had a losing trade, because that can happen. Excuse me, you can be right about this heading up, but you get triggered in, stopped out, triggered in, stopped out. That can happen. In this case, as I said, I would have put my stop loss below this low, and I believe in that case that if I'm right and it's going to carry on up, I'd still be in the trade. But I'm okay with how this went down. I'm very okay with how that trade went down. I'm okay with my decision. I have to be, because I made that call. That was my responsibility. And I explored all the different things that could happen. But I also wanted to talk you guys, I'm going to wrap up in the next 2 minutes. I wanted to talk you guys through what the price action was telling me. And the price action should support your idea, not fight it. So Euro Yen, I said to you, okay, what I would need to see this fail, see a candle push through, which we did, which I honestly wasn't really expecting. But that looks good. So Euro Yen looks good. Euro Yen is probably going to hit target. Euro dollars looking good. That's probably going to hit target. And silver, I think, is still going to go lower. I still think that's going to go lower. So probably the outcome here is 3 winning trades, 1 losing trade, which in principle, there might be another setup. Like if I get another bullish candle like this, if I get a bullish candle here above this. So this trend line is not a trend line in the traditional sense. It's just a general line. So in other words, I just want price generally above that level. A higher low. I'm just tracking the high low. So if I get a higher low, if I get a nice bullish candle like this one here, if I get a bullish candle like this here, then I could take another trade. We've already tried to break out, but we've already breached the surface, and then I think I could take it. So I'm okay with that. That's fine. And the others will probably go on to hit their targets. So there we go. We'll see what happens with silver. Even if silver stops out and Euro Yen hit targets, I'll be up, let's call it 5R on those, minus 2R on the other trades. I'll still be up 3R, which is fine. Up 3R for the day is fine. So 2 to 5 trades per day or 2 to 5 trades per week. It depends on what's available in the markets. If there's trade setups, you take them. 2 to 5 trades is probably not a bad estimate. I think if you're taking 20 in a day, there's a problem, because there shouldn't be 20 setups, and you shouldn't be trading 20 setups. Like, if you're taking 20 trades, is it because you're winning? It doesn't really make sense. Usually people are taking 20 trades because they've had a lot of losses and they want to make up for them. So usually if you're taking 2 to 5 trades and you have 2 or 3 winners on that, you should just bail. Like once you're up 4 or 5R for the day, or 6R, like that's fine. Just you are so much better off psychologically if you quit ahead and then come in the next day, like, okay, how's it going? Rather than go until you start failing. It's bizarre. It's like in sports. Again, you wouldn't go until you are getting tired and exhausted, and then you hurt yourself, because that was counterproductive. You have a period where you are in the zone and you run for an hour or something and then you're done. But you don't run for 10 hours every day. It's not productive. So trading is exactly one of those things where it's really not worth your while to do it until you start losing. So you start out the morning with a winning streak and then you keep going until you end up with a losing streak. That you shouldn't do that. Start with a winning streak and finish. To just get into that as a habit. So you're trying to create all the habits that you want to last you through that. One last look at these. Euro Yen's fine. Dollar Yen is coming back. I want to see what happens in this area. It's okay. I'm fine with that. And silver, I think, will carry on down anyway. And Euro dollar looks okay. Cool. So how many trades per day, week? How much time would you recommend new traders spend? Oh, great. So how much time? So the sessions are what I would do. So if you're able to, I would try to do 1 or 2 hours in the morning, just to see those first few moves, or do an hour during, if you're working, if you have a live, then you do it from the US session. So you try and take a break between, if you can, 12:30 to 2, and do your trades between 12:30 to 2. And so you're doing that for the practice of it. That's it, because you've also got to learn. So you're going away, you're watching YouTube videos on strategy, you're watching what I'm doing. That's all your study time, because you're still skilling up, you're still building skills. Then you've got to apply it. So you've got to separate the two. Your study time you can do on the weekends, you can do in the evenings, but your trading time is probably 6 to 7 a.m. or 12 till 2 p.m. in that area if you can, because that's when the moves are happening. Cool. Okay. I'm going to let everyone go. So thank you very much. I'll let everyone go. Yeah, hope you found that useful and instructive. I still think this is a strong possibility it's going to push up again. But anyway, there we go. And silver, we'll see. We'll keep going. But there's the That's it. And also, by the way, it helps me to rationalize why I'm taking the trade to you guys. When I have to explain why I'm taking it, it's very good for me as well. I have to like break it down and do that. Cool. All right, guys. I'm going to end the live stream. Thank you very much. As always, it was an absolute pleasure. And if you like this, I'll maybe do one a week or something. We'll see how that goes. But very cool. Thanks, John. I appreciate that. I saw a message from you I need to reply to. I will when I get a chance. Probably not today. Today is a crazy day. But thank you. All right, guys. Thank you. I'll let you go now. Before I do, one more thing. Because this camera... I painted the wall behind me, which has now produced a problem with the light. It's... So... I can do this. Yeah, oh, there we go. There we go. We're okay now. Okay, guys. All right. Thanks very much. We'll speak to you next time. Cheers. Is that it? End.